Hi guys, my name is Ara and this is Rozara's Investments. I started to make this video a minute ago and then my phone ran out of storage at the last second, so I have to re-record it. So anyway, today I would like to talk about a little company that I just literally found out about 2 hours ago and I just bought 200 shares of about 5 minutes ago. So the symbol of the company, if you want to follow along with the video, is HX. HX. So this is a little company in the peer-to-peer lending industry. It is a small Chinese company with a $500 million market cap. So first of all, I want to talk about risk for those people that are newer to investing. So I'm not the type of person that is afraid to lose money. I severely hate losing money, but I'm not afraid to lose money. And if I lose $10,000 one day, I'm going to feel miserable. But I'm not going to not invest again in the future. So that being said, this company is about $11.86. That's what I put my order in for. So $11.86 a share. So if this company goes to $118.60, then I get about 10 times my money. I mean, there's a little bit of trading fees, but that's negligible. So I get about 10 times my money. So let's say this stock does really bad, then I'm gonna lose maybe 30% of my money, maybe 40% of my money. That would be terrible. But if the stock does really, really good, I can make 500% or 1,000% on my money. So that's the beauty of investing in these small companies. So my kind of investing philosophy, before I really go into depth about the company, is I like to invest a little bit right away, just in case the company like kind of skyrockets from here. I don't want to miss out. So it's a little bit of the fear of missing out. But then I do some research, and then if I do love the company, then I invest a lot more. So I'm already invested in a company called Dividend, which is YRD. I made a video about a week ago if you want to check it out. But now I just found out about one of their competitors. I don't know if it's really a competitor, but they're in the same industry. It's HX, Dividend. So because this company is growing revenues so quickly, and because they are growing earnings so incredibly quickly, they have many, many more borrowers than they used to have a year ago. They have many more lenders than they used to have a year ago. I would expect this company to be a lot bigger in the future. So one of the risks is that in China, they have many more regulations to protect borrowers from kind of predatory lenders. Same thing in America. Like we don't want people charging them 90% a year in interest. So basically, that is one of the risks, and that's one of the reasons why these stocks, YRD and HX, why they're both a very low share price, a very low price to earnings multiple. So for reference, Dividend is trading at about a 7 times price to earnings multiple, and HX is trading for about a 10 times price to earnings multiple. So that is very, very cheap, especially considering how fast the revenues are growing, how big these companies are going to become in the future. So basically, these regulations are kind of scaring investors away, scaring them away from investing a little bit. And it's kind of keeping the share prices low or pushing the share prices down. And I kind of view that as a good sign. I view that as a real opportunity to get in while the share prices are low. So this company, for example, at $11.86, I mean, yes, it could go down from here, but they are growing borrowers and lenders. Let's not even look at like revenue and earnings. They're growing borrowers and lenders in the ballpark of like 90% to 200%. Now, I don't like to get too specific on numbers. I love math, but I don't like to get too specific on numbers because I'm investing now for the future, and the future is unknown. I don't know how fast they're going to acquire new investors, new borrowers in the future. But based on how they've done in the past, I can kind of extrapolate from that and think that they are going to grow very quickly. They're signing up new people to their service. They're kind of a middleman, and they take a little cut from the middle. They take a little bit from the borrowers, a little bit from investors. They're providing the software. They're providing the service of connecting the borrowers to the investors. So their risk is not as big as if they were lending money themselves. But there are quality assurance programs in place to kind of like insure the borrowers. And Dividend is doing the same thing. So actually, one more thing I wanted to mention is recently I saw an article, and I was reading this article this morning, and the girl conducting the interview, and you can find this on Yahoo Finance if you're so inclined to read it yourself, by the way. The girl conducting the interview was asking the CEOs of Dividend and Dividend about the regulations and how that's going to affect their companies in the future, how that's going to affect the growth trajectory of everything. So Hyundai had some good answers, and they said they have quality assurance programs in place, and they're basically selective about who they lend money to. And Hyundai, I actually love the answer. They said that the regulations aren't going to affect them at all. It affects some of the smaller companies in the industry, but it's not going to affect them at all. And the reason is because they just don't lend to those type of people that would be super, super high risk. So Hyundai said that all their customers already own a credit card. And why that was important is because they already have an established history of good credit. These companies lend to people with at least good credit to excellent credit. And because China has kind of a growing middle class, there's always more people that are borrowing money. Not for the I don't want to say for the first time, because they have a credit card, so already they have borrowed in the past. So they have a record of borrowing. But they are, I'll say, new to borrowing money, or relatively new to borrowing money. And same thing with the investors. A lot of their investors are people that are new to loaning money. Because China has an up-and-coming middle class, every year there are more and more people that are borrowing money for the first time. There's more people that are lending for the first time. There's more people that are kind of going from lower class and making just a little bit of money to actually becoming middle class and having disposable income, buying houses for the first time. So China's really growing in that respect. And that's why so many Chinese companies are growing revenues ridiculous. Like they're completely outpacing US companies. So anyway, the CEO of Hyundai said that the new regulations are actually not going to affect them at all, because they don't lend to those types of people. They lend to people that already have an established history of, they already have a credit card. And it's actually probably going to benefit them, because while the new regulations keep out the other companies, the other smaller companies, the other new entrants into the industry, now Hyundai and Hyundai, they actually have less competitors because of the regulations. And so if these regulations are pushing down the share price, we can buy shares for cheap. And if they're keeping out competitors, then that's kind of a win-win situation. It seems like, you hear about China, doing all these regulations, and it seems like a bad thing, but if you actually think about it, it's actually a good thing. Like, you want good regulations to be in place. You want investors and borrowers to be protected from X, Y, and Z. You don't want it to be like the wild, wild west, where anyone can do anything. Anyone can charge any interest rate. Anyone can just not pay loans. You want there to be solid regulations in place. That way, when people go to invest or when people go to borrow, they kind of know exactly what they're getting into. So anyway, I did buy 200 shares myself. If this company, after further research, it seems like a good thing, then I probably will buy more. So at a $500 million valuation, I'm hoping for this company to go to $5 billion. That would be 10 times my money. That's actually 900%, because it would be $4.5 billion more than they are right now. So anyway, but yeah, I'm shooting for 1,000% on this one. I have never made 1,000% on a company. I have made hundreds of percent on companies, and I've never lost 100% by investing in a company. So I'm hoping this is my first company that I will make a true 1,000% on. So I hope you learned something. I hope you got intrigued by both HX and YRD in my previous video. I am an investor myself. I do always put my money where my mouth is. I'll always tell you if I'm not invested in the company myself. So if you like the video, please hit the like button. If you want to subscribe, if you want to share the video with people that might want stock ideas, that always helps me. But I'm not doing the videos for the money. I'm actually doing the videos more for conversation and getting new people invested. I like to talk about specific companies at a time and go into a little bit more detail. So if you ever want to have a full conversation about the company, I would be more than happy to talk about it. So thanks for listening. Thanks for watching. Have a great day.